Welcome to the 2024 Economic Preparation and Comparison Channel. I'm your host, Tony. Thank you for joining me on this Friday, TGIF, September 20th, 2024 edition. Please be sure to subscribe to this channel for the latest interpretation of financial news. I appreciate everyone's support, ladies and gentlemen. And today's brief edition, I'm just going to be talking about the Dow Jones soaring above 42,000. After we got this 50 basis point rate cut this week, I don't think it's any surprise in our community or others that there would be a surge, as that means that free, cheap, easy money is flowing at least on Dow Jones on the stock market, but not on Main Street. So it was a winning week for the stock market in the Russell 2000, S&P 500, and the Dow Jones, quote unquote. Now, so we can see here the Dow Jones is well on its way to 42,000 and possibly 45,000 before this year end is out in 2024. We just have to wait and see how long the sugar rush, the sugar high lasts from the effects of this rate cut. Remember, we still have two more Federal Reserve meetings to get through in October and November, and it's up in the air whether or not that's also going to be 50 basis points or just 25 basis points apiece on those rate cuts. But the trend has started now for quantitative easing, so that means that for those savers and those other people, you're going to be punished, and those who are looking into getting more credit versus a new car or maybe a house purchase maybe in the next year or two, maybe you'd be good to go with that if rates continue to go down. I don't think they're going to go down to zero, however, like they were before. I think they are going to be on a cutting trend eventually here. So we have that going on. The Fed has set out on a, quote, recalibration of policy. Here's what Powell's new buzzword means. Fed Chair Jerome Powell has unveiled his latest buzzword to describe monetary policy with a recalibration of policy at a pivotal moment for the, quote, central bank. Asset prices soared as expected yesterday too, as well, as investors took Powell at his word and this move. And so this, quote, really allows him to push this narrative that this easing cycle is not about us being in recession. It's about extending the economic expansion. And so basically they're saying that they're going to fund everything. They're going to paint it as they're going to fund everything, infrastructure and everything included, by printing up a bunch of money, and before we get into the downturn, the recession. Now, how long that lasts? It could be 2 years, it could be 1 year, 1 to 2 years, or it could be more. And then after that, the Roaring '20s ends, and then they can come out and say, listen, we've been in a depression since 2008, 2010. And this is why, and this is what we're going to do to fix it. So they're going to go more the other way, at the quantitative easing way, this year during this election cycle. So you can see asset prices soared. Investors were happy. They took him Powell at his word. After swinging violently Wednesday, today stocks are up today, tepidly, moderately, and that's because of that going on. But the unemployment numbers are going to be really concerning here from the Department of Labor. In the week ending September 14th, the advanced figure for seasonally adjusted initial jobless claims was 219,000. This is a decrease of 12,000 from the previous week's revised level, so that is awesome, good news there. But the previous week's level was revised up. It's the first time they usually revise these numbers down. Previous week's level was revised up by 1,000 from 230 to 231,000. So that's not much. Average 4-week moving average is 227,500 initial jobless claims. Now remember, we still have continuing jobless claims that are rising. So it's kind of a weird situation. We have initial jobless claims that are falling, which is good news. Hey, that's good news. But we have continuing jobless claims rising. And you have to also remember too that a lot of these jobs are part-time. Seasonal jobs are being added. You see the media is talking about Macy's and Target adding these seasonal jobs, and UPS, FedEx. Yeah, that's good, but the thing is that those are seasonal jobs. They're going to be gone after January, February, and that high is going to be gone. And so that's what's happening here. That's the difference between initial and continuous jobless claims. It's much better to have continuing jobless claims fall than it is to have initial jobless claims fall, in my opinion. But it's still good news that those jobless claims are coming down. But inflation is not contained. It's just slowing. Inflation has not gone down to the target 2% at all. It's still above 3.5%. And then real inflation is still 8 to 10%. But the gas prices have come down a little bit, and things are situated, obviously, because this is an election year. But don't be fooled, because it's just a temporary low in the prices. Inflation is still there. It's just not rising as rapidly as many people, many senior economists had anticipated before. And so this is what's going on here. That's why we say we continue to prepare, because like I said, they're going to continue to spend this. We're just going economic expanding. We're just printing up money so we can get all the stuff done. But the debt is growing still. We're still heading toward $40 trillion of debt in this country. And also the BRICS nations and other nations, the competition is growing as their manufacturing bases like China and all that, they're producing more in India and China and other places than we are producing. And so that's going to lead to a severe recession. It's going to be here probably after 2025. And that's when the rubber meets the road, in spite of all this printing up money and everything that's going to be going on. And so people are looking at that and they're saying to themselves, well, the math is not adding up here. A 50 basis point rate cut, I think they say is pretty unusual here according to this economist, but that's pretty much nominal. I mean, it's not like it's only half a percentage point. If they did a full basis rate point cut, then you know something is really up. So this is nothing really too alarming, but the fact that they are starting to cut is signaling that this economy cannot handle any more higher rates like it did in the 1970s when Volcker cut these rates higher and higher. I mean, raised the rates higher and higher to help ease this inflation. So we'll see what happens. God bless. Have a good weekend. I'll talk to you very soon on the next episode. Thank you for listening.